Hey guys, Doug the Retirement Guy. Got a nice review of Omaha, the Vista Shares Target 15 Berkshire Select Income ETF. We did this when it first came out. We showed where we purchased it. We're going to give you some updates on that. And where's this fund at? Where's it going? Where do we want to be? And so on. So before we get into that, first I want to say thank you to all of the subscribers out there. Definitely all of our Patreon supporters. Without that, we could not do this show. So if you want to support the channel, you can do it multiple different ways. The simplest way, hit the subscribe button if you're not already a subscriber. Go into the description, you'll see support the channel, hit that Patreon. You can do a free channel, you can do a free subscription, you can do a one-time donation, or you can do a monthly where you get all the information that we put out there. But let's get into today's video and see how Omaha is doing. So Omaha Vista Shares, this one really is a unique type program. Is they came out and they targeted the 15 Berkshire Hathaway Select Income Fund. So they're trying to take the top holdings and basically mirror what they have been able to do. Their whole thing is about generating income. They started off right from the start that their annual target is going to be 15% distribution sent out monthly. And they really are just trying to generate the income and also some growth off of the fund. So their distribution rate is 15%. The SEC yield is 0.75. That's changed from before. It was 0. Now it's up to 0.75%. Expense fees still staying at 9.95%. We look at the top holdings of Omaha and we see that Apple has taken over the #1 slot. The Berkshire Hathaway was #1. It's slipped down to #2. They're doing the American Express, the Coca-Cola, Bank of America, Kroger. Very, very solid, sturdy funds, locked in, doing very, very well. So the percentages have, they got a nice well mix between those. So the question is, why Omaha? Why would we want to get involved in this? Well, first off, it's that 15% return of dividend. And that is 15% of the base price of the stock. Now, there's something unique when they put this out is they're telling you up front how they're going to do that 15% return. So it's pretty locked in. That's what we're going to end up seeing here. We'll see what happens in year #2 or year #3, what performs of that. But so far, they're pretty locked into that number. They are offering a monthly paying dividend, and they're copying the Berkshire Hathaway top portfolio. And we always say, is that safe and secure? Boy, it's done great for select people, and it's going to do well in this package as we talk about. Now, one thing I want to bring up about the dividends is, and so many people comment that you can reinvest the dividend or you can take the regular cash flow. On this channel, we normally show regular cash flow because that's what most of our viewers are doing who are in retirement. They're taking the cash flow and they're buying and living life and doing what they want to do. For the people getting close to it, yes, I highly recommend doing the reinvestment. Take your dividends, put it back into more shares, as they call drip it back into the fund to continue to grow, or take that money and put it into other stocks that you want to do some investments with. But you have the potential of doing either or. Now, these are some facts and milestones of Omaha. I have been so impressed with this fund. It came out of 3/5 of 2025, so we're really only about 4 months involved into this. The distribution, it pays 1.25% monthly of the share price, so you can pretty much know what your dividend's going to be. But this last one is one that's blown me away. In only 3 months, it passed the $300 million mark invested. That is unheard of. The $100 million mark was always the big one. How long does it take to get $100 million? In 3 months, they've done $300 million. So they are on track, almost like doing a $100 million investment per month. Now, I know that's not the exact way it's been going, but averages work out. But these guys are like 300. I want to look. The last time I looked, it was $330 million already invested under this. So there's a lot of people putting money into this, and they're reinvesting that money and continuously growing their fund. So it's a huge thing. I think they're one of the fastest growing ETFs available at this point in time as it goes to investments. We take a look at the distributions so far, and you can look at it. They're paying 25, 23, right around that 23 cents per share per month. Your distribution percentage is 1.25, as I said, and they've already marked out. You can already see the dates that their declaration dates, the exit dates, the record dates, payable dates. They've already put that out there, so they have already registered what they're doing. They have it registered at what the percentage is going to be, so everyone can calculate out exactly what the number is going to be ahead of time. So there's no worry of, are we going to get a dividend for this? Is this actually going to happen? But the answer is yes, we're going to continue to get it. Now that 30-day SEC yield 0.75, that's coming into play a little bit. That will probably either bump up the distribution side of it, or they'll use that to put it into investments forward. But my understanding of it as this point in time, that 30-day yield will actually be added to the distribution rate. Not that that's going to make a huge difference, but they will be starting to see this, maybe even change the distribution share amount. So the return of Omaha, and things were going really well prior to the April drop-off. The tariffs that kicked in and caused the market to shake up and rattle, and you can see that it took a hit, and it's the lowest this fund has ever been. Okay, but it recovered. It came back and didn't hit quite the mark we were hoping for, back to that $20 a share mark, but it held. And you look at today at 1947, it's basically somewhat flatlined, bottomed out. So we know that this stock is pretty much going to stay in that $19 range. We look at the returns in 1 month, they're up 1%. In 6 months, they're down 2.14. Year to date, of course, is going to be the same because we're only, as I said, we're only 4 months into this. But realistically, that one April hit so early in the program has given you the black eye of the negative 2.14. But it's recovered, it's coming back. So really, if you want to say, the growth of the stock right now is fairly flat, but it's paying out that dividend is what you're trying to collect from it. So again, we'll look at the dividend history. We've shown this once before, but we're going to give you basically in the 4 months that we have done this, it's been a steady 15%. There's nothing to it. It's a mathematical program that they're using, and using those funds accordingly. So it really fits in well for a retirement program that you count on getting 15% of that number, or as I tell everyone now, is figure you're getting 23 to 23.5 cents per month into your pocketbook, and that's what this thing's really starting to show. So what we did here is, if you remember back, we did invest $10,000 into Omaha on the first day that we could buy it, which was on 3/5 of 2025. Stock price was $19.83, so we bought 504 shares. We were able to collect 25 cents on that first dividend. And from there, you look now, our total investment right now basically in the past 4 months is we're down $398 or 3.98%. So that comes into is buying at the higher price, but and just before the April drop off. If we were trying to do something and show you something different, we probably would have bought in April and May to build up our shares, put more money into this. But when we take a look at our dividends in the 4 months, we've collected $487 or 4.87%. which means in 4 months, we basically have made, including dividends, $88.81 or 0.88 percentage points. Now, looking at these numbers, I would not be impressed. I would not be some coming back and saying, oh my God, this is the record stuff to hang your hat on. And that does sound like I'm wishy-washy back and forth, but it really comes into is we've lost so much in value versus what we're gaining in dividends. But you have to remember is if we continue on the path and we get 15% return from our money, we should be collecting about $1,500 in dividends. Do we see the stock dropping $1,500? No. If the stock stays exactly where that is today and finishes out the whole year, we're still going to pick up $1,000 or a little over 10% of our money return. So I think this just shows it's so early, it's already recovered to a balanced level, but it's in a position where I think long term, this again makes complete sense. So price movement over time, I call Omaha has actually been steady. 84-day average, that's how many trading days it's actually had. It's at $19.24. The current price of $19.48, it's about 1.2% above average. So it's really in one of those situations, I would say, you have no comfort. You could buy now and be fine. Maybe wait for a little bit of a drop off. Maybe we'll have a little bit of a change here shortly. But you're only going to pick up maybe 10, 15, 20 cents max. So maybe a 1%, maybe a 1%, 2% drop off that you'll pick up a few cents here and there. So it's comfortable buying at any one of those price points. The recovery from April tariffs has been very well. You look at the two lines and the two marks that we actually have, they've really dialed between the two. So is Omaha good for a retirement account? The answer is definitely yes. 15% dividend, solid. It's paying on a regular basis. We don't have a worry there. It's recovered from a bad drop, and I expect it to recover from a bad drop if we have anything in the marketplace again. So I put it to you guys, it's a moderate buy. Add that to your retirement portfolio and make it happen. Guys, this is Doug, the retirement guy. If you like what we're doing, give us that thumbs up. Helps the channel. If you're not part of this club, hit the subscribe button. Join us. We're looking for as many subscribers as we can possibly find. And also, if you have any comments, leave them down below. Everything helps the channel grow because we're trying to help your pocketbook grow as well. We'll see you next time.